All right. I think we're good to go. So, hey guys, just wanted to do a quick update. Obviously, anytime there's a significant move in the market, um, we do our best to give you guys watch lists and ideas and guides before these types of moves happen. So, hopefully, over the past couple of weeks, you've seen kind of how we look to anticipate moves and the different strategies that we employ for catching them. So I just want to kind of review. I'll start off by obviously just talking about what's happening today. And then I want to pull up some charts from the watch list that I posted this morning and just talk about the big picture. One thing I notice is there's and we've talked about this over the past few weeks, is there's a big difference in the mentality behind amateur traders and people that have the professionals mindset. Amateurs chase price and they get excited when everybody else is excited, right after the moves happen, where people with the professionals mindset try to anticipate and think like a chess player and then don't really get emotional no matter what the market does, right? And that's really what we try to instill with you guys, both in the boot camps that we do and the live events and obviously the updates and the mental mastery course that you guys all have access to. So with that, I just want to help kind of guide where we are right now and then obviously what I'm expecting in the future. So let me go ahead, and if you guys haven't read it, you can just follow along with me. I'm just going to continue to share this and I'll just pull up these charts, but hopefully you guys read the watch list from this morning. But what I really wanted to do was just show some comparisons between big inflection points in past market cycles and show some similarities. Trading patterns, technical analysis patterns are kind of like fingerprints. They can be similar. Some of them can be very, very similar. Some market cycles can look very different. They're very rarely, if ever, the exact same, right? Like whenever we look at prior market cycles, we can take that information and use it to come up with ideas, but as that like really common disclaimer says, where past performance doesn't predict future performance, that's actually, there's a lot to that. And it's very true because the market conditions that are present today are different than the market conditions that were present in the past, right? You have different market participants, meaning different traders and investors. You have just a different fundamental landscape, right? So what's happening in the world around Bitcoin and crypto today is much different than what we were dealing with in 2013 to 2015, right? But even though that's the case, the one thing that kind of stays constant is the way that the mass majority of people behave, right? And trading and investing to me is a game of understanding mass human psychology and then exploiting that, right? And so let's just talk about a little bit of history and get us caught up with where we are today. So I want to go back and just kind of review some of the charts that I posted this morning, show you the similarities. And for those of you that have been in the room with us for the past couple of months, this is going to be really easy to understand because we've been talking about it pretty much every week. And we're seeing this play out as expected. So it's kind of cool to see what we've been anticipating actually working, right? So this is the first bubble in 2013 where price went from, about 15 or 20 bucks, ramped up to 260 and then crashed, right? And then consolidated and then had a breakout before the end of the year where it went from about 100 bucks up to over 1,000, right? And this is where, so I actually got interested and first started trading and investing Bitcoin in 2013. And I spent several months researching and really just trying to understand the landscape before I said anything publicly about it. And my first blog post was actually in November 2013, where I posted that I thought Bitcoin was in a bubble after this run, right? And since then, obviously, a lot has changed, but there's a lot of similarities to how the price action is behaving today to what it was doing back in this time period. So again, another thing to keep in mind is each market cycle, as this ecosystem matures, they get longer and longer, right? So like this 5-phase cycle here was only, give or take like 6 to 9 months. And then the second one going into 2014 was a full year. And then the 2017 cycle was like 3 years, right? So the cycles become larger over time, and the price swings and the liquidity and everything just gets bigger over time, right? And that we expect that to be true until it no longer is true, right? Until we hit like mass adoption, or Bitcoin dies, or some black swan event happens that we don't know about, right? And that's why like we go forward with a thesis and we place bets, literally, right? We put risk capital in the markets with an uncertain future, right? That's what trading and investing is all about. So the similarities here that I see are there. Here in 2013, there was really no like technical accumulation, right? Like we like to see. It was more of just a V bottom and then a test of this resistance at 125 and then a breakout, right? And you got kind of this washout right before the breakout, which Bitcoin just loves to do because the biggest moves come when the least amount of people are in them, right? So that was 2013 in the spring. And then what happened after that is you can't see the top of this, but this was coming off of 2014 and 2015. And this is where we actually had quite literally almost a full year of accumulation, right? And so I see similarities today, both in the 2013 cycle and the 2015 cycle. But what happened here was we got more time for accumulation, and then we had a breakout, which to me, this breakout down here around 250 is kind of similar to the most recent breakout we had around the low 4,000s. And then what happened is we had a break of multi-month resistance, right? So 300 was multi-month resistance, and price had about 100% parabolic move. And it was funny, the catalyst for this was actually a Ponzi scheme out of Africa. I think Africa. It's like, it was called the MMM, like triple M Ponzi scheme. And funny enough, I mean, that was the catalyst to actually kick off this bull trend. So yeah, so you never know what the fundamental event could be that actually triggers it. But basically what happened is we went from 250 to 500 and then quickly pulled back to retest 300, to retest that accumulation range. And then that ramped up and gave us higher market structure. So we had higher highs and higher lows and a bullish ascending wedge into 475 resistance. And that was a 6-month or so consolidation pattern, which led to another breakout. And then you guys know the story from there, right? So if we look at those two examples and then we compare what has happened most recently, you can see, again, not every market cycle is the exact same, but you can see kind of like a fingerprint similarities behind the price action. So what happened most recently is coming off of the longest bear market in history, because these cycles are getting more mature and lasting longer. We had a multi-month multi-month support at 6,000, which we called this the line of hope, because so many people were quote unquote hoping that 6K was going to hold. And when it didn't, a lot of people panicked out, right? And what's interesting about this one is we got call it 4 or 5 months of consolidation here. And it basically, there was no confirmation of a shift until this breakout above 4,400, right? We talked a lot about this. We anticipated the hell out of this. Just basically when we saw the squeeze, it's either going to break down and go to 2K or break to the upside and confirm a shift in immediate momentum, right? That was step one. And then thinking like a chess player, we try to just see the map 2 or 3 steps out, right? Just like a chess player will try to anticipate the future possible moves of his or her opponent. That's what we like to do with price action, is think about what those scenarios could look like. And what your hypothesis is very rarely going to be exactly what happens, right? We're really looking for the forest through the trees, right? You don't know what exact price levels are going to get hit or the exact time frame that things are going to take to play out. But if you're on the right side of the market and you focus on the bigger moves and the bigger picture and the bigger areas, it's going to help you remove the noise and focus on what's actually important, right? So what happened here, just kind of similar to early 2013, where this is kind of a hybrid between 13 and 15, where we had some consolidation, but it wasn't quite as long or as clear of an accumulation pattern as 15. It was more of a V bottom, and then we broke above major resistance, which was 6K, right? And I'll tell you, this happened quicker than I anticipated, right? We knew there was a possibility of a break of 6K, but as we were working through this area, if you look back at some of my watch lists and my trade alerts and the market updates, I was saying like, hey, I would actually prefer and not be surprised if we got some consolidation in between like 5,500 and 6K. And then last week, when the Binance hack happened and the market shook it off like it was nothing on this little red day, which actually turned into a bullish doji, that's when I send the alert saying, hey guys, this is where things could actually go parabolic. There's just a lot of strength here, right? So what has happened since then is we've got a parabolic push through that zone. And if we jump to the live market, this is kind of how we measure these areas. So I'll go down to let's look at a 4-hour chart. Actually, let's do a little bit larger. Let's do a 12-hour. And so you can see what happened here is we had this market structure with the bullish ascending channel, right? And then as we were testing this and we were squeezing up above 6K, you can see as price broke above this zone, this is where the parabolic move began, right? Because price started speeding up relative to prior price action, right? Like it took us from the start of this little consolidation, it took us over a month to do about 25%. And then here we've moved about 35% in less than a week, right? So we've done much more in much less time, right? So you can see how the price is speeding up. That's called a parabolic move, right? Now, parabolic moves, especially in Bitcoin, are very, very interesting because you never know how high the parabolic move is going to go. And I historically have a habit of severely underestimating what Bitcoin's price can do. And here's why. Here's why parabolic moves happen so fast and often lead to much bigger moves than what seems quote unquote reasonable. Okay. So when you have a parabolic move, what is actually happening, right? What is causing this? Well, whenever we have, I look for a major emotional price level, right? What is that major emotional price level? What is the most obvious, the one that everybody has been thinking about? What do you guys think? What is that price level that everybody's been looking at for the past year? Yeah, absolutely. 6K, right? That's been the most important price level in Bitcoin because it, for almost a year, was support. And then over the past 6 months or so has become resistance, right? So when a major emotional price level breaks, it sets off a chain reaction, okay? And that chain reaction is this. You get a couple of things. You get breakout buyers, right? You get people that see the break of a strong price level. And then what happens is potential sellers pull ask orders right? So the sell side thins out, right? So basically what that means is anybody that was thinking about selling, when they see price starting to move, they go, okay, well, maybe now is not a good time to sell. So if I had a limit order sitting at whatever price, I'm just going to cancel that and watch price and wait for a slowdown, right? And then the third thing that happens, and this is where things actually can go way beyond what seems rational. This is where things start to get insane, right? Because breakout buyers are one thing. People pulling sell orders is normal. What actually adds like whatever. So the thing that feels like dumping gasoline on a fire is number 3, which is shorts, right? Like people start shorting parabolic moves, right? And that is somewhat of a rational decision, right? When you look at price action and you go, oh, wow, that's speeding up relative to prior price action. And then you're also, you had a short squeeze at 6K, but then those people step back in and they go, oh man, you know what? This is really overbought. Let me step in front of this thing and start shorting. Okay. So that's what happens though. And let me ask you guys this. Are short sellers in a market, is that bearish or bullish pressure? So when you have a lot of people that are shorting a market, is that likely to create downside price action or upside? Man, you guys are good. Absolutely. And why is that? Why is it bullish and not bearish? Because you think, okay, people shorting a market, that means it should go down. But when you have too many people shorting a market, especially when there's euphoria, yeah, it's bullish price action, because when people short, for them to get out of a position, they actually have to buy, right? They have to cover. So this is why I think shorting into parabolic moves are infinitely more risky than shorting breakdowns in bear markets, right? I've talked a lot about this over the past few years, and that's why I haven't done much shorting. I'm just a fan of shorting breakdowns where you can have set risk to reward. But shorting against a parabolic move, even though you could be right and make a lot of money, it's also very, very risky because of short squeezes, right? So here's an example, and this is exactly what happened here, right? So the parabolic move starts at the 61% extension, where we break outside of this range. Things start to get heated, right? We have a little bit of a pause at the 100% extension, but this is where mom and pop wake up late to the party and start going, okay, I'm going to start market order buying this thing. And then it blows up from the 100 and goes up to the 161, right? Your next level. And then this is where I think short sellers really start to step in, is when you have a doji on the daily, right? So you start to see this weakness and you go, okay, 7,500 emotional price level, red day, right? Potential pullback zone. So what happens is you have shorts that pile in here, right? And then what happens though is, and this is what happens both on the upside and the downside, specifically in Bitcoin. I've noticed that this happens more in Bitcoin than any other market because of the inefficiencies with exchanges and the slow transfer times from bank accounts. I haven't noticed this in equities or futures or any other market outside of Bitcoin, because it's unique to the crypto ecosystem, which is number 4, where I'm trying to think of the best way to word this. I might change it after I say it, but essentially what it is you have people that are late to the party, late deposits at exchanges FOMO buying and ends up squeezing rational shorts. Okay. So this is where shorting can get really frustrating against parabolic moves. And that's what happened overnight and this morning. Okay. Think about this. It's Monday, right? So you have people that weren't really paying attention late last week. And then they see over the weekend or maybe Friday or Saturday, and they're doing these transfers last week, sending money to Coinbase or whatever. And then they wake up Monday morning and they see, or even yesterday and this morning, and they see prices up and they're like, I can't take it anymore. Okay, let me just market buy. Okay, I can't miss this party. I'm having FOMO. And then what that does is, let me go down to let's do a 1 hour chart. Right. So you can see this is the peak around 7,500. We went over under 7,500. It rolls over. If you're looking at this as a short, you can make an argument like, okay, this is a head and shoulders with the lower right shoulder, right? You could make a case that this could be a top. So shorts pile in probably somewhere inside of this box, right? So think about when people start shorting in this zone off of a head, then what happens is you're watching this 7,200 level, right? So this is kind of a line in the sand, 7,200. And then on that bar, guys, notice that bar, what happens intraday is you get a higher high, right? And then so anybody that was shorting through there, they have to cover. So not only mom and pop chasing this stuff, you get like double buying action, right? Because the shorts are covering, and those Monday morning, like I'm going to call them just retail investors that are chasing, are market buying. And that's what took us to 8K, the 200% extension, right? So the fib areas work, right? The fib areas, this is where we get the action, is around these zones. But it's not until you understand the story of what happens that you can clearly see why price did what it did, right? Does that make sense, guys? Everybody clear on kind of the process of what's happened over the past week? Is that clear? Is that confusing? Cool. So I don't know if I can get a hourly chart to show up for 2015, but let's just look at what happened here. And again, this is kind of, this is a little bit faster, but was anybody in the live stream that I did when we tagged 500 here in 2015? I'm just curious. I think this is when I was actually on, what was that, Periscope? Anybody on that? So I did a live stream right when we were tagging 500 here, and was basically talking about the same thing. Because if you look at this, right? So let's just walk through this story. So you have the initial breakout, right? The initial break of 300. You have the retest, right? Shorts pile in at resistance. Once they cover, you get the first push, second push, and you can't really tell on a daily chart, but if you just look at the range from the open, so 4 to 500 intraday, that was one day. It was like a big V top, went all the way to 500 and then pulled all the way back, right? So that was just a really fast capitulation. So the market moves today are much bigger and typically last a few days longer than they did back in the day. But it's really the same thing that happened here is what I'm seeing here. Okay. So what's the next expectation? What am I looking to do? Oh, and by the way, before we move on, so again, like I said about kind of the story between trying to short parabolic moves, that's why I really like or prefer shorting 1, 2, 3, 4 breakdowns right? So like say this is price action right here. And let's say, you're in a bear trend. So you get a run to the downside. Say you get a sweet spot fib retracement. And then you get a retest of that low. On the break of that, right, typically in a bear market, right? So the first condition is bear market. Second condition is clear support. Third condition is you can set risk behind the retracement. And then number 4 is an expected fast sell-off on support break, right? This is my kind of ideal scenario when I do short, because A, you have the bigger picture in your favor. 2, you have a clear entry trigger. 3, you have clear risk, right, where you can set your risk behind this retracement. And then number 4 is you're expecting a fast break, usually, like anywhere from 1 to 3 days on the downside, where on a parabolic move, it's very difficult to know if you're shorting the exact high or if late mom and pop investors are going to squeeze you just because they're throwing market orders after their deposits hit the exchanges, which can take a few days. So that's why you get these secondary legs in Bitcoin, both to the upside and the downside, because there's this whole population of market participants that are several days behind the game in crypto. And like I said, it's something very unique to crypto because of the way that the exchanges work with the legacy financial system, right? So, little caveat there. Now, whenever we're looking at the market, and I got blown up by people asking me, well, hey, what do you think? What are you doing? What's happening? And hopefully everybody's watched the video about how to plan trades. And it all comes down to the first question that you want to ask is which capital bucket am I using right now, right? So the different types of capital buckets that we have are cold storage, right? The Bitcoin that you buy, you put in a hardware wallet, you bury somewhere, and you don't really care what the price is. That's kind of like a if the shit hits the fan scenario, or if fiat currencies go to zero kind of thing, right? Like kind of the doom and gloom scenario where you say, I'm going to tuck this away. I'm a hodl. I don't care what the price is. I'm going to buy it today and not really think about it, right? That's kind of what I've done with gold. Like I own some gold. I don't really care what the price does because gold isn't really a good medium of exchange. It doesn't really do anything for me outside of just kind of barely beating inflation over time, right? That's what cold storage is. The next capital bucket is like position trading, right? Like 2 to 3 year, like big cycle plays, right? This is where Rocky is mostly focused on right now, trying to just go for the bigger swings. The third capital bucket is short-term trades, right? Either day trades or swing trades, anywhere from like 2 days to 2 months on average, right? So this was like, for me, it was the breakout trade. And then you have like startup or angel investing or, just like early stage, like VC type plays where you basically assume that you've lost your money. And then if you get 1,000x return, awesome, right? So for me, just to get you guys caught up that haven't been with us for a while, I have not touched my accumulation positions from back here. All right, so if you go back and look at the trade alerts and the watch lists and the classes, Rocky actually went a lot heavier than I did on the accumulation play. As you guys know, I mean, he was literally just buying the blood here and was basically spitting in trolls' faces on social media. So I was a little bit slower to play it, but I think it was getting fills initially, 4,200, 4,000, somewhere in here. So that was my kind of bucket number 2, my position trade for looking to scale in. And to be honest, I was hoping for another extension to the downside, looking for, anywhere from 1,500 to 2,500. If we had a secondary washout to that, I would have gone even more heavy on that accumulation play. But we didn't get it. And so opened a bucket number 3, opened a swing trade with the breakout here, and then have been taking profit along the way. So I still have a small runner, but for the most part, I've taken a lot of profit on that. Whereas on the accumulation play, I haven't touched any of that. In fact, I'm looking to, if we get the opportunity to build into that, if we start to see another scenario like 2015, right? So this is what I was showing on this chart. We have the push, about 100% gain from the first breakout. If we can get some kind of either a parabolic reversal and then anywhere above, I'd say, 5,500, if this zone down here, 55 to 6K holds up, we start to ramp up off of that, I'm going to start to accumulate more. That's kind of my ideal scenario. If let's say that this price action just gets stupid and the short sellers and the mom and pop investors battle it out and that drives price above 8,500, I'm definitely not going to chase that. What I will look for is some kind of 1, 2, 3, 4 pattern. So what we could get is something where if we don't get a deep pullback, but let's just say that we consolidate up here somewhere, right? And again, we don't know if this is the top yet, but say we get some kind of shallow, like 23%, and then we put in a 1, 2, 3, 4 breakout at a key level. I would likely buy that, but with very, very, very disciplined risk to reward, right? So it would be just like a breakout trade. It'd be a breakout trade where I would set the risk behind the last pivot low and then run another larger extension to find a profit target for that, right? So it could potentially look something like this, where I'd look at, a 61 or 100% extension. And that's if price action like held up and we didn't get that deeper pullback. I feel like, and again, this is just my opinion, and based on, what Bitcoin has done in the past, I wouldn't be surprised to see a much deeper pullback. And in fact, I think that's where the probabilities lie. But in the event that we get that scenario where there's a more shallow, if I can get good risk to reward to the upside, I would look to take that, but I would be very, very focused on those targets. And I would actually probably have limit orders set at those just in case I was sleeping and it like spiked up to a level. I'm not a huge fan of leaving limits just kind of floating on exchanges, but in an event where there's a lot of emotion behind price and it's a very disciplined technical breakout trade, I'll usually do that on Bitcoin, kind of like I had the limit buys set down here. I would have kind of a similar scenario to the upside, just because I feel like the risk is a lot higher now that we have, we've done the 100% move. So that's really it. I'm not going to, like I said, I'm not really interested for me in just trying to fight and short and catch that. And I'm also not overly interested in trying to catch every little move in every crypto. Like we've been saying for the past year, we think that, at least I'm not going to speak for Rocky, but I think he'll agree with me. I'm focused more on the top coins by market cap. So I do think that 90% of the coins on coin market cap are going to fail eventually, right? There's over 2,000 of them now. And over time, I think most of them will fail, right? Why is that? Well, they're startups, they're competing. There's a massive money grab. There's a massive gold rush. Everybody and their mother over the past 5 years, or really over the past like 2 or 3 years, has been trying to create something to grab a piece of this pie. But the reality is there's only going to be maybe a few dozen at most real winners over time, right? When it comes to like true cryptocurrencies or crypto assets, not security tokens. Security tokens, I think there can be thousands of them, but those are backed by an asset other than a native blockchain, right? So with that, I'm really just focused on kind of these top market cap coins that have real products, you know, like BAT with the Brave browser. You know, I like exchanges, right? Any exchange that is basically a cash machine. Privacy coins have gotten hit pretty hard recently. Ethereum. So I'll review my trade alert from Ethereum. So I've got Coinbase and Bitfinex here. So if we take a look at Ethereum, there is a multi-month resistance level through 200 here. So I started, as my trade alert said, I started to scale in a little bit. As we were challenging 200. So this is what I mean by like a really nice kind of price structure with set risk to reward. So we've got this pivot low, right? Where if we break below that, then we'd have a lower low, and then the downtrend would be expected to continue. So if we can hold up above, I'd say like the 150-ish level. And here's kind of what happens with capital flow as Bitcoin or after Bitcoin has a big move, right? So this is historically what has happened. So it's like step one, you get a big upside move in Bitcoin. And then two, when BTC has a local top, right? Meaning like an immediate top. We don't know if that's going to be the long-term high, but when it starts to pull back and people start to sell out of Bitcoin, some people sell into fiat, but some people sell into other alts, right? So it's like when you sell Bitcoin, you don't have to sell it for USD or euros or whatever, or even Tether or another stable coin. Some people will go hunting and they'll say, okay, well, what other coins do I like? And let me sell my Bitcoin for that altcoin, right? And then what that leads to is a bull cycle in some altcoins after the BTC pop, right? So that's kind of my thesis. I went through and I've been kind of watching some of these top coins. Ethereum, obviously, number 2 has a pretty real use case, has a lot of trading liquidity. Again, I don't like to trade real illiquid stuff. I only want to trade stuff that can trade multi-millions every day, right? Or if it's a super, super early coin and it doesn't have a lot of liquidity, I will generally accumulate and hold for longer periods of time, right? So that's Ethereum. The other one, you can see the price structure here on Tezos looking pretty strong. We've got the $1.10 zone that's been defending a support. 1, 2, 3 extensions to the upside. Now we have a bigger price pattern, right? Where if we measure this move and plop a retracement on top of that, you can see we came to the first sweet spot retracement zone, 38%, right? So that's holding up pretty nicely. Let's see. I think BAT, what's BAT doing today? BAT, I don't really know what my expectation for this is. If you look at the USD chart, you can see it's basically been flat for a long time. This is one of those that I look at as kind of like a startup company that I don't really expect massive appreciation in these tokens unless people really start to adopt the Brave browser and or just start using the BAT tokens for, micropayments and contributions to content creators and stuff like that. Once there's like real adoption of the actual product, right? So that's pretty much it. I mean, I've looked at some others. Litecoin was looking pretty bullish. So we talked about, let's see, this was February, March, had a nice little breakout pop. And then that actually went to the second zone. So you've got 100, which is a really nice emotional price level. And this is setting up for another potential 1, 2, 3, 4 breakout. So a breakout above 100. That would be nice. Oh yeah, Apollo got the halving in August for that. So maybe a lead up. We'll see. Yeah, so that's pretty much it, guys. I just, wanted to do a quick update. Just talking about everything that I see, kind of my plan, some of the most important lessons that I think we could share during this time. And honestly, just want to give you guys kind of a home where we can talk about the mental side too, because, I know when markets start moving, kind of the amateur mindset likes to kick in for some people where they get really emotional and they start chasing. And these are the times where you just need to stay extra focused and extra disciplined. And just understand that there is always another trade, right? Even if you didn't get as big of a size on a trade that you wanted, or you missed a trade completely, or you are just new and you're getting into this and you're still learning. We have people at all different experience levels. And our biggest thing is, we just want to help you guys understand not just the technicals, right? Technical analysis is fairly easy to learn. After a couple of months, say you go through the boot camp and, you can learn everything you need to learn. The hard part is managing your own emotions when the markets are moving and having confidence to place your money on the line, right? Risk capital with an uncertain future. And, that's why we pushed out the mental mastery course to you guys, and why we spend so much time just talking about the reasoning behind the price action, right? It's one thing to look at this and go, oh, price mooned, or, oh my God, this is going crazy, we're back, right? Like to say all kind of like the cliche, like fun things that are out there in the Bitcoin world, but to actually understand what's happening and why behind it, that takes it to a whole other level. So, all right, let's do some Q&A. Anything on Ripple? I've been kind of ignoring Ripple until we do something like this. You can see even with all this action, there's nothing really happening. It could be an accumulation, but I want to see some confirmation before really playing that. Chris, do you think the opening of Binance tomorrow with deposits, withdrawals will contribute to an even higher price? I think it's going to open a lot of volatility, and I think there will be a segment of those people that will market order buy. And I think there will be a segment of those customers that will say, hey, I'm glad they were closed. Now price is up. I'm going to market order sell. So if you were to ask me like what I think is going to happen based on Binance's customers, I don't know. One thing I can have a pretty high degree of certainty in is there's going to be volatility when they open, right? That flood of emotional order flow is going to definitely cause some big spikes. So I think, and thank you for bringing that up, because I think it is something to pay attention to when that does happen. If you start to see like 5 or 10% runs on the like sub 1 hour chart where we're just getting like these big spikes. And if you're looking at the order book on Binance and you're like, wow, that is super thin, and all this is people slapping each other with market orders, just be careful if you try to trade around that. But it's almost impossible to know like how that will play out, because there could be one whale, there could be one guy sitting in his room right now steaming, going, I hate Binance. I have $10 million of Bitcoin that I want to sell. And as soon as they open, I'm going to just market order sell that shit. Right? That could happen. Or there could be somebody sitting there who's like running a hedge fund, who's like, I just raised $50 million and I have to deploy this, and I look like an idiot because I don't have a big size in my fund. Therefore, I don't really know how to trade. So I'm just going to slap these $1 million orders, right? That's why it's so impossible to really know what's going to happen, is because I don't know the people that are behind those decisions and how much size they're slinging. And right, there's limitations to what a technical price chart can tell you. You know, if I had access to all of Binance's records, I might be able to come up with a little bit of a better idea, but outside of that, it's anybody's guess. Yanni, would you consider that we've already established a higher low by surpassing 7,300? Or would you compare, where do you compare the 8,400 high? Yeah, I mean, this is definitely, to me, a higher high, right? So there has been a technical shift as we broke above 6K. The question is this, okay, this is the real test. Is there's really 3 potential outcomes, right? This V tops and gets slammed back below 6K, or even below, I would say 5K, right? That's where most of the market structure support is. If that happens, which I don't think is the highest probability scenario, but if that happens, that would be more of a like a dead cat from like 2014, right? Where like we had a little bit of a pop through here, right? So we had multi-month support, had a little bit of a trend, and then it just kind of rolled over. And again, this wasn't really much of a V-top, and there was a lot of bearish news and like just problems with Bitcoin through here. But if it did something like that and it broke back below the range, then that wouldn't be like a technical like higher low. But if it did something like this, where we pulled back and somewhere inside of this zone we found support, then that would be confirmation of a higher high and a higher low. So that would be more like 2015 right here, right? So it's like, here's the parabolic move. If we get support to hold, awesome. And then when it ramps up, then we have confirmation that the entire price structure has changed. So we have I call this move, I call this little parabolic pop here, kind of the first sign of a shift in long-term market direction. And for those of you that really love log charts, I think log charts are deceiving to some level, but you can get valuable information from them. But if you look at a long-term log chart here and you compare where the market direction shifts happened based on the prior market cycles, this looks very similar to that, right? So here was like the first one back in 2012, where it was like 15 to $5 or whatever. Accumulation, resistance, squeeze, pop. The first 2013 V bottom one that we looked at, and then pop. Much longer time frame, year-long accumulation, and then pop. Right? And you can see each time the time to the next high gets longer and longer, right? So that was less than a year, a little bit longer. This one was the longest, about 4 years from peak to peak, right? So with halving coming up, if you look at the timing, so I think it was summer. Was it June or July? Do you guys remember when the halving was in 16? It was somewhere in here. And then, so the ramp up was, call it November was the shift. So about maybe 6 months prior to the halving. So here we are, May 19. So that would actually put us about, I believe, a year out from the next halving. It's kind of interesting. So yeah, that's what market structure would look like to me. I sold in the 6K zone, 5,500, 6K. What levels should I take a loss? Not sure what you're asking there. If you shorted and you're holding, that's pretty wild. Yeah, exactly, RK. Always another trade. How do you think alts will likely do if we get sideways Bitcoin action between 6 and 8K for a couple of months? Well, Bevel time, kind of like I was saying with the shift in capital. So when Bitcoin sells off, I would expect some coins to pop. And I'm leaning more towards the kind of the long tail of the biggest projects. So I really only want to trade stuff that's liquid and has a real use case. It could be like we saw in 2017. I think it was the spring of 2017, like through here, where we got that kind of first altcoin season. It could be another one like that. I don't know, but I'm not going to play it like that. I'm not going to try to catch every single breakout like we had in 17. I'm just going to focus on the highest quality projects. Mike is still interested in Poly. Yeah, I'm watching this. I'm just waiting for the bleed to stop. So you can see here, market structure on Poly is just really ugly. Lower low, lower high, lower low, lower high. And nothing has really changed. It just keeps doing that, this slow bleed. So what I want to see is a market structure change where we get a higher high, higher low. So say we did something like this where we broke up through that resistance and then held a higher high, and then this secondary breakout. So if we got like a 1, 2, 3, 4 over here, then I would buy that because you have a shift and you can set risk. I don't always try to catch the first move in a market. I like to pay for confirmation, because if the trend is real and it's going to last for several weeks or months anyway, you can afford to pay for that confirmation of waiting for the secondary breakout. Yeah, so I'm looking to be patient with this. So this is kind of a hybrid for me of a trade and an accumulation play. So like if we get a measured move, like a 1-to-1, and we get up in like the $2 to $3 range, I'm going to likely pull my cost basis out of that and just remove any risk I have. And then be very, very patient to see how crazy this could go. Because at a $10 price, like we've talked about, that would put us at a $7 billion market cap, which is not out of the realm of possibility. But again, I'm not going to hold the entire position for that. I think Rocky might have a little bit of a larger, or maybe a lot of bit of a larger risk tolerance for me on this one than me on this one, I should say. So the price structure looks good, and I'm trading the chart, but I'm not just holding. I'm not going to hold the entire thing for that. I would definitely take my cost basis out. That just helps me sleep better. I really like scaling in and out of trades. And my goal is just to catch the meat of a move. I don't give a damn about catching the exact low and the exact high. Some people attach their egos to that stuff and they feel sad if they don't get like the entire run. If I make money and I trade it in a way that leaves me with no regrets, no matter what happens, that's the only thing that matters to me. Right. So that's kind of how I'm playing this one. Yeah, I do think there's a lot of bag holders still, you know, so that's one thing is when you have lower highs like this and you have a lot of people that bought through here, that creates a lot of bag holders, right? Something that we don't know though is how many of those bag holders sold through here and how many of them actually panicked into our limit orders here, right? So when you have the 6K break and everybody that bought up here sees that, there is a percentage of those market participants that goes, I can't take the pain anymore, right? It's the exact same thing that happened here where the folks that were buying on the parabolic run here, they sold into our limit orders at 188 here. And again, we didn't know this was going to be the pivot low, and we didn't know that this was confirmation of a bull market until right here, right? It took us a full year to go, oh, okay, things are shifting. And what happened though is a lot of these people panicked and sold into these highs. So a lot of people probably sold into each one of these bounces. And the question now is okay, is there going to be a flood of new capital that's going to supersede or overtake whatever bag holding orders there are, right? And that's something that we can try to think about and guess, but we really, the truth is in the price action, right? We don't know. It's whatever the price action tells us. Gadir, so talking about Binance again, you know, it's just deposits and withdrawals disabled. There's people that are placing orders, but it's that secondary flood of capital that I was talking about, kind of like we saw today. Think about like Coinbase and Kraken, you know, once the link to the legacy financial system is open again, that creates that secondary flood, right? So there are people, and this is so interesting and so unique to crypto, where you have this delay, this inherent delay. You have this inherent delay of wires, right, from bank accounts. When those clear, if somebody is feeling FOMO or just fear fear drives everything. We can call FOMO greed, but really it's just fear of missing out, where when prices are falling, it's fear of losing, right? So when people feel like they're held back by those wires, that creates that secondary push, right? So that's really what I'm talking about. Like, we don't know. I mean, it could be a non-event. It might open and whoever wanted to trade most of the people have placed their trades. But what I've seen over the past, we saw a lot of this in 2016 when Bitfinex got hacked and there was the BTCE issue. I can think of like a half a dozen or more examples of when an exchange got hacked or when something broke and went down. Once it comes back online, for whatever reason, you just get a flood of this activity. Okay. So that's what I mean. And again, the answer is, I don't know what's going to happen. We just try to anticipate it and think about what could happen. And then whenever things do come back online, then you go, oh, okay, it's a non-event, or, oh, wow, people are doing X, Y, and Z, or it looks like kind of like that, the flash crash that we saw in Kraken the past couple of weeks. That was what, like one guy, what was the size was massive. It was like several thousand Bitcoins on one order, right? Like one idiot could completely throw off the entire order book. So that's one of the inherent risks in Bitcoin too, is even though it's super liquid on some of these exchanges, you have these whales that can do really, really dumb things. Just because somebody has millions of dollars worth of Bitcoin doesn't mean they're smart. You know? Cool. So, Warren, any comments on privacy coins? I've just been letting the bleed kind of bleed out. I don't try to catch a slow grinding falling knife. We're looking at, like, if you look at Zcash, obviously this is major support. We don't know if it's going to hold up. It's kind of the same thing. I take the same attitude with these as I do Ripple, where I don't necessarily want to accumulate a whole bunch of random coins that I'm going to have to think about for a long time. I would rather pay for confirmation. So I look at the market structure. I say, okay, what would be the first sign of strength? Well, if we got a push, a retest, and then a breakout, right? So a breakout above 80 would be the first sign of strength, be the first higher high, maybe put in a starter position on that, right? That's kind of how I think about these. I don't try to accumulate as low as I can and then guess when they're going to pop. I wait for confirmation and then trade, right? That's just my style. I don't like having to wake up every day and think about a lot of bags. I prefer to pay a little bit for the confirmation, but the benefit of that is I don't have to wait as long. Yeah, if there's a pullback in Bitcoin, I would expect some coins to pop. This is a good question about USD charts versus BTC charts. I know we've talked a lot about this in the past, but you've obviously got two charts when you're dealing with an altcoin. You've got the alt BTC, and then you've got the alt USD. Oh crap. Alt BTC, alt USD. I put more weight generally on the USD chart, just because that's kind of the unit of account that I look at, and that's just how I measure my portfolio, is based in dollar value still. I prefer, whenever you have, like, if I'm interested in buying a coin, like an altcoin, I prefer to see a bullish scenario on both of these options. But if there's a clear setup on the USD chart, I'll take it. For example, if we look at the Tezos BTC chart, this looks really crappy, right? This just looks super choppy and kind of really hard to understand. I mean, actually not really hard to understand. It's just there's not a ton of price structure, right? So what you can see in the alt BTC charts is the opportunity cost of not having that value in Bitcoin. Meaning, like, even if you have an alt that gains on the USD, if the BTC chart goes down here, that means you technically would have been better off just being in BTC, right? But diversification helps. Like, that's why we have alt seasons. That's why there's currency competition, right? So I just tend to focus more on whatever chart looks the cleanest. Like, can I make sense of the technical analysis? And B, like, how do I want to allocate my portfolio? Like, I think it makes sense for me, at least, to have a larger position in Bitcoin than any other crypto, my portfolio generally reflects coin market cap. Like generally, like obviously I don't own all these coins, but like if you look at my portfolio and then the percentage of that portfolio, like I weight higher to the larger market cap coins, right? But I think it does make sense to just think about it in terms of gross fiat value. That's just how I do it. Okay, Crypto Loco, I sold at that level, but there's a possibility it won't come back to that area. What level? Well, so what I look for is another setup, right? It's easy to, like, hindsight is easy and go, oh man, I should have held more. And, you know, now I'm just watching price go up, right? Then you say, okay, well, what would the next setup look like? Like you want to think about trade setups, not just random, like, hey, where do I buy at this random area, right? It's like, okay, do you have a breakout setup? Do you have a dip buy setup? What are the reasons in the area for the trade you're taking? Not just, okay, price is mooning, so I'm going to market order buy, right? You want to think about the trade setup. So for me, that's what I said. If we get another 1, 2, 3, 4 breakout pattern and it has good risk to reward, I'd entertain that. Anything outside of that, or actually, excuse me, there's another setup, which would be a dip buy to prior resistance turn support, right? So I know, just like a chess player, if the market does A, I'll respond by doing B. If the market does this other scenario, I might respond doing that too, right? So it's all if-then statements. And if I can't make sense of something, or if I have to like squint to see it, if I have to like work too hard to see what's happening, then I just ignore it, right? I don't feel like I have to catch every move in a market. I only want to catch the moves where I feel like I have a significant advantage, meaning statistical probability that it's going to win, and I can manage my reward to risk favorably. If both of those conditions aren't true, then for me, the action is nothing. It's a very, very different mindset. The trader's mindset is very different than that of a CNBC watching investor. You know, one is very disciplined, one's methodical, the other is hope and dreams. Right? Vegas was built on broken dreams of people that don't understand probabilities. Right? Be the casino, don't be the gambler, basically. Yeah, like Mark says, consistently give me, you know, the middle 60% of a move, and I'll gladly miss the first and last 20%. It's a great mindset to have. Yeah, Kevin. Yeah, we're recording. Okay. Well, let's go ahead and wrap this up, guys. I'll answer a couple more questions and then we'll get going here. No, I don't have any limit orders currently open. Yeah, we talked about shorting a lot. I don't really have a long-term, Yassine, I don't have a long-term target for Ethereum. I'm just looking at the first profit target. That's how I work. Whenever I see a trade, I look at the first target and then respond to how price action actually plays out. 2,500 would be a 10x of today, basically, or more. Could happen. But and I'd trade it if we get setups that allow me to participate. But I'm not just buying and hoping that that's going to happen. Yeah, let's look at the longs. Longs aren't specifically high right now. They're kind of mid-range. If we look at this as kind of the highs for longs, we actually kind of came off of the lows. And then I look at kind of equilibrium through here. You can see this is where the kind of the order flow kind of teeters. So I'd say we're kind of mid-range on longs. shorts. As you guys know, I had this posted before the parabolic move, showing that we were at the highest level of shorts basically since the beginning of the year. So like kind of the first of the year here. And that's also come back to this equilibrium area. So I don't see a significant edge on either the long or short side here. At least with the order flow. Yeah, Ellie, the LTC BTC chart shows the value of Litecoin compared to the value of Bitcoin. So just like I was explaining, you have the value of an altcoin compared to a fiat currency like dollars or euros. And then you also have it denominated in Satoshis. So it's there's like one extra level of complexity compared to like stocks, right? Like if you're looking at Uber's disaster, if you're looking at Uber's IPO, right? You're looking at the dollar value. That'd be kind of like comparing Uber's stock price to like Apple's stock price, right? Yeah, Ian, we're going to be making an announcement this week about the boot camp. So any of you guys that have been waiting to go through it, we are going to do one this year. We've just been updating a lot of stuff because there have been a lot of changes since we did the first one, but you know, the feedback from you guys has been really awesome. And I know there's a lot of really valuable stuff in there. So we'll let you guys know whenever that's ready. All right. So hope that's helpful, guys. We'll go ahead and wrap this up. Again, stay disciplined, stay patient. Let me know if you guys have any other questions. I know we covered a lot, so we'll send this recording out. And I'll see you guys in Discord. Cheers, guys. Appreciate it.